Welcome to Matters Financial and Geopolitical from the Frontier, and in fact Nairobi, which is very cold and a little chilly since yesterday, markedly. Let me start with macro thoughts. The theory of supply and demand is a rosy, market-driven, trickle-down vision. It also happens to be wrong. That's in the LA Review of Books. Ben Bernanke, the stimulus is going to hit the economy in a big way this year and next year. And then in 2020, Willie E. Coyote is going to go off the cliff. He said $1.5 trillion in personal and corporate tax cuts and a $300 billion increase in federal spending signed by President Trump makes the Fed's job more difficult all around, because it's coming at a time of very low US unemployment. And this is what I was saying in my response to Donald Trump Jr., that it's a sugar high. What you are getting is a stimulus at the very wrong moment, he said on Thursday. The stimulus is going to hit the economy in a big way this year and next year. And then in 2020, Willie E. Coyote is going to go off the cliff. Another thought, Erdogan fought the market and the market won, Bloomberg opinion, that's correct. Peter Brandt, who I follow on Twitter, he's a classical chartist and a very good one. He said Bitcoin is setting up for a big move soon. From a pure charting point of view, the move could be in either direction. In fact, the burden of truth is on the bulls, he says. I like this quotation from Mario Andretti. If everything seems under control, you're just not going fast enough. Insight comes more often than not from looking at what's been on the table all along. David McCullough, I can't disagree with him. After coming across that piece of music that I put on the website yesterday, I came across this, Vis-a-Vis. I was wondering why I was enjoying it. It seems to be late 70s West African jazz. I don't know what you call it, but it's the joie de vivre I like. The slightest engagement with history teaches us that life is better for almost everyone today than it was for even the most privileged in the past, which is a thought worth considering. NASA's Curiosity rover discovered organic matter on Mars. I don't know if that's tongue-in-cheek or not. Big think. This is the new cover of Time. And I was thinking about President Trump, and he's made his allies uneasy, and he gives succor to his supposed adversaries. It's very curious. Trump about the June 12 North Korea summit, I don't think I have to prepare that much. It's about attitude. I think they're going to get on like a house on fire. Global Peace Index, the world has become less peaceful over the last 10 years, mostly due to conflicts in the Middle East and Africa. Joe Stalwart posted this tweet from Abe Shinso. Boris Johnson attacked Brexit plans and praised Donald Trump in leaked remarks from a dinner. A recording of Johnson's comments made at dinner of around 20 people on Wednesday evening was leaked to BuzzFeed and The Times. It showed him saying, "There now may be a meltdown in negotiations, but I don't want anybody to panic because it's going to be all right in the end." There was a strong chance Brexit talks would leave the UK locked in orbit around the EU in the customs union and to a large extent still in the single market, he said. About Philip Hammond's Treasury, he said, was still fighting Brexit, describing it as basically the heart of Remain. The Americans have run the tech world for decades. Microsoft, Google, Apple, blah, blah, blah. We're used to them winning, he said. No, the Chinese are about to win. They've got 5G, they found out a way. Everybody's going to be getting stuff on their gizmos through the Chinese system and not the American system, so watch out for that one. And then warning of difficulties at borders after Brexit are nonsense and mumbo jumbo. And saying, I'm increasingly admiring of President Trump. I've become more and more convinced that there is method in his madness. Imagine Trump doing Brexit. He'd go in bloody hard. There'd be all sorts of breakdowns, all sorts of chaos. Everyone he'd think he'd gone mad, but actually you might get somewhere, he said. Interesting developments in the foreign currency markets all around. Let me start with the euro. The euro, which traded as high as 118.40, has now slipped back to 117.70. Dollar index has been moving higher. The Japanese yen has moved a lot higher, 109.38 last. Swiss franc 0.9006 when I checked. The pound 134.10. The Australian dollar has been softening, 0.7583. India rupee 67.465, and of course they put up interest rates. South Korean won 1074.88. The Brazilian real, which has been smashed to smithereens, is at 390. Egyptian pound 17.8520, and the rand has sold off above 13 to 13.03. The dollar index on the rebound again. Euro dollar, about which a lot of people have become more confident, has slipped back, last at 117.68. The target remains 114.50, which was the target from a while back. After earlier climbing to a 3-week high in the case of the euro on bets that the ECB was set to signal stimulus end and as narrowing of what had been the ever-widening US-German 10-year spread. Commodity markets, well, let's take a look at that. Gold slipping off 1296 area. Crude oil last at $65.54, so it's found some footing around here. But the real developments have been in emerging markets, which I'm now getting to. Economic growth in the biggest emerging markets is still high. This is worth considering and thinking about before we go into what's happening. Averaging about 5.5% this year, according to UBS. South Africa is the laggard, with GDP forecast to expand just over 1%. I think they're going to be considerably faster than that. And a lot of the data we're getting is now backward-looking. But on the 14th of May, I was worried about an emerging market crisis, and I wrote, "This has all the ingredients for baking a good old-fashioned crisis." Dollar Turkey had to hike rates. Erdogan lost. This is a tweet from Fero TV. MPC decision of 7th June 2018, 1-week repo rate has been increased from 16.5% to 17.5%. Heading for a bear market, Brazil's Bovespa is down 16% since the middle of May. That's a big hit. Brazil's real is in free fall. This chart is from Bloomberg. And this is a classic cause and effect, or the cause being, I saying, it has the ingredients for baking a good old-fashioned crisis. Just look at that chart of the real. Down 16% this quarter. Brazil's 2-year bond yield absolutely lives off. And look at this chart of EMFX against the dollar. And you'll see that that point I was making on the 14th of May was properly made. Sub-Saharan Africa. Taiwan warns African countries that loans from its nemesis China come at a price of making Africa beholden to Beijing as huge debts rise. Angola's Expansio reports every Angolan owes $745 to China. While Kenya's Standard writes the government has dug Kenya into a Chinese trade hole. And I said that the tagline that the Madam President Tsai Ing-wen of Taiwan should be using is "Don't get Hambantota." Of course, the Hambantota port is in Sri Lanka. And that was another white elephant where they couldn't make the returns pay, and they've given it up to the Chinese on a 99-year lease. Ethiopia's new prime minister wants peace and privatization in The Economist. The speed of events caught Ethiopians off guard. When Abiy Ahmed took office as prime minister on April 2nd, he did not. He did so as the head of a deeply divided ruling coalition. Inexperienced, 42-year-old, came from the Oromo wing of the ethnically based coalition, was viewed with deep suspicion by many of his establishment colleagues. He was taking charge of a country under a state of emergency after more than 3 years of anti-government protests and ethnic unrest. few expected him to achieve much sooner. These past few weeks, we've all been pleasantly surprised. After inaugural address in which he called for unity, apologised for the government's killing of protesters, the former army officer toured the country to muster support. Not only the country, but he's toured the regional neighbours. He's been on a whirlwind engagement, internally and externally. Exiled opponents have been invited home. Representatives of dissident media outlets based abroad have been encouraged to set up shop in Addis Ababa. That's a big point, isn't it? Plans to amend the constitution and introduce term limits. Until this week, Abiy appeared to be paying less attention to Ethiopia's troubled economy. His few remarks suggested he planned to leave untouched the state-led developmental model pursued by the EPRDF since it came to power in 1991. And at a meeting with business leaders in April, he said that the government would preserve its monopoly in key sectors such as infrastructure, banking and telecoms. Few regarded him as an economic liberal. However, recent indicators seem to have jolted the government into action. A vast program of public investment propelled annual GDP growth to around 10% for most of the past decade, albeit from a low base. But the IMF reckons the growth will slow by more than 2 percentage points this year to a still respectable 8.5%. Public debt, most of which is in foreign currency, is at almost 60% of GDP. Spate of defaults on Chinese loans in recent weeks, and local contractors complain the government is not meeting its obligations. Earlier this year, the IMF raised Ethiopia's risk of debt distress to high because of the possibility that it will not earn enough foreign currency to pay its debts. Export revenues barely budged for 5 years. In some important industries the government is trying to promote, such as garments and leather goods. They have even declined. That's incredible. As a result, Ethiopia's foreign reserves are thought to cover just over a month's worth of imports. Businesses say the shortage of foreign exchange is the worst in recent memory. Many have waited for more than a year to receive their allocation from state-owned banks. Pharmacies are running low on medicines and antibiotics. Factories are lying idle for want of raw materials. Inflation is running at nearly 15% a year. So the news that the EPRDF would in fact liberalise swathes of the economy to boost growth and exports came as another shock. And that's why I said, I think yesterday, that this decision was made out of necessity. So I'm very bullish about him. Sarah Bainton Glenn, an analyst at Standard Chartered, said Mr. Abiy Ahmed has signalled his way of thinking is very different to what we've had in the past. Absolutely. And I think he's a disruptor who has fused Paul Virilio and Malcolm Gladwell. Virilion's speed, Paul Virilio said, speed now illuminates reality, whereas light once gave objects of the world their shape. He's basically moving at such a fast speed, he's outflanking the static forces that are stacked against him. But when you move at speed, and this is what Virilio is thinking about contemporary politics, is you have a chance to, to just basically overwhelm them. And then I think, in the case of Gladwell, you're looking for that magic moment where your virus spreads like wildfire. And I think that's what he did. He stoked it up with that tremendous engagement he had countrywide. Sending love messages, love bombs to Isaiah Afwerki. He's engaged heavily with the region. So very much a disruptor. And I want to send him the book, Speed and Politics by Paul Virilio. In response to an article by David Pilling in the Financial Times when he compared Abiy to Gorbachev, I responded by saying that Gorby lost the Soviet Union. I think Abiy Ahmed is gaining the country. Big difference. The French Foreign Minister Yves Le Drian met with Denis Sassou Nguesso, who's been in power for about 40 years. Broke Zimbabwe plans spending spree as the election approaches. Mnangagwa's pledged to spend money his government doesn't have on increasing its 350,000 workers' salaries as the country gears up for next month's elections. Civil servants account for most formal jobs in Zimbabwe will get 15% raises. Veterans of Zimbabwe's war against white minority rule will be awarded improved benefits. And this is an increase the government can't afford, clearly. But however, there are other considerations. It depends how much support outside powers want to give Mnangagwa. Paul Kagame meeting the world's most famous lesbian, Ellen DeGeneres, isn't just a photo op, and this is a great point. He's always ahead of the curve, and I think in this matter as well. He posed with Ellen DeGeneres and her wife. Ellen, of course, came out more than 2 decades ago, and the Quartz is asking, could this photo op be more than a photo op? It could be a regional turning point, I wonder. Look at this African currency performance for the last quarter from Paul Wallace. The shilling is really a standout. South African all shares down 1.87% this year. South African rand and bonds tumbled to a 5-month low in a panic sale. This is spillover from the emerging market selling we saw. We've got to keep an eye on this. This has now moved dramatically away from the 12 level. Nigerian all share up 2.09% year to date. Ghana Stock Exchange up 19.26% year to date. It was up considerably more than that. Rwanda's national carrier, Rwanda Air, got approval for direct flights to the US. Maiden flight expected in August, a few months before Kenya Airways. ExxonMobil is seeking to sell out of its Tanzanian gas field, a large undeveloped gas field off Tanzania. A company focuses on the development of an even bigger project in neighboring Mozambique. Planned strategy of the CEO freeing up cash and narrowing the American firm's focus on a number of giant projects around the world, deemed to have the best prospects, including in Mozambique, Guyana, and US. 35% stake in Tanzania's Deepwater Block 2 field. Kenya, foreign direct investment in Kenya soared to $672 million last year, up 71%, versus a 22% drop in FDI in Africa as a whole. That's pretty good. But it's interesting where the investments are going. Look at this, buoyant domestic demand, inflows into ICT. This is from UNCTAD. Among the companies undertaking major expansion in Kenya in 2017 was South Africa's Naspers, MTN, Intact Software. US tech firms Boeing, Microsoft, and Oracle, and Johnson & Johnson, Diageo as well. But Ethiopia remains the magnet for foreign investment in East Africa, despite a 10% decline last year. $3.6 billion in foreign investment that poured into Ethiopia last year surpassed the $672 million attracted by Kenya. Interesting, isn't it? And then given the FX problems. According to Standard Bank, an email I got, the central bank has been leaning against shilling strength, which is, you can see when you see that chart by Paul Wallace. Nairobi all share, we've been up for 2 sessions now. The index is up 3.41% year to date, and down just under 10% since hitting an all-time high on April 5. NSE 20 is down 9.76%. And Kenya, of course, I alerted you to this before. This is the Citibank index as a percentage of GDP. Kenya, I think, is the 5th highest holder of Bitcoin, which is quite incredible. It speaks to the M-Pesa culture we have here. Once again, thank you for stopping by.